Hey everyone, welcome back to Adu Expert, your smart learning hub. BitMine is a publicly listed American cryptocurrency mining and blockchain technology company that gained significant attention in global financial markets during the mid-2020s due to its unprecedented Ethereum acquisition and treasury strategy. According to the latest data as of August 2025, BitMine holds approximately 1.15 million ETH in its corporate treasury, with a current market value of around $4.96 billion. Due to fluctuations in Ethereum's price, this value often surpasses the $5 billion mark, making BitMine the company with the largest Ethereum treasury worldwide. This milestone places BitMine among the most prominent institutional players in the crypto space, second only to major Bitcoin holders such as MicroStrategy, while highlighting the increasing adoption of cryptocurrency by publicly listed companies. The story of BitMine's Ethereum accumulation is not limited to a few months but is the result of several years of strategic planning, market research, and technological upgrades. Initially, the company focused on Bitcoin mining and traditional data center operations, but the growing popularity of Ethereum and the expansion of decentralized finance (DeFi) compelled the company to shift its attention toward this digital asset. Ethereum's strategic significance lies in its smart contracts, NFTs, and the extensive developer community that supports the network, making it one of the foundational pillars of blockchain technology. In late 2024, BitMine initiated an aggressive Ethereum acquisition plan, purchasing large amounts of ETH from the open market. Within the first week of August 2025 alone, the company added approximately 317,000 ETH, valued at roughly $2 billion, significantly increasing its total holdings. This acquisition was made possible through the company's fundraising initiatives, in which BitMine leveraged its publicly listed shares to raise capital. To support its long-term Ethereum acquisition strategy, the company expanded its at-the-market ATM offering program to a total of $24.5 billion, enabling it to continue buying ETH over an extended period. BitMine's chairman, Tom Lee, referred to this initiative as the alchemy of 5%, meaning that the company aims to hold at least 5% of Ethereum's total circulating supply. Since Ethereum is limited in supply and decentralized, achieving this target represents a highly ambitious, long-term investment strategy. BitMine does not merely store these assets. The company participates in Ethereum staking, contributing to network validation and security, which also generates additional ETH rewards. Currently, BitMine's business model relies on three main pillars. First, cryptocurrency mining infrastructure, which allows the company to participate directly in blockchain network security and transaction processing. Second, large-scale Ethereum acquisition and long-term holding to benefit from potential appreciation in value over time. Third, staking and other blockchain-based yield-generating activities, which help the company cover operational costs and fund further acquisitions. It is important to note that BitMine does not solicit funds directly from the general public. Individuals who wish to participate in the company's financial performance can do so only by purchasing its shares through traditional stock markets. These shares are listed on multiple global exchanges and traded under standard regulatory frameworks. Therefore, BitMine's operations are separate from any investment applications or personal investment accounts, operating instead within regulated financial markets. The market impact of BitMine's large-scale Ethereum purchases has been noticeable. Following the acquisition of 317,000 ETH in early August 2025, the price of Ethereum increased from around $4,300 to nearly $4,500. This demonstrates how institutional buyers can influence market liquidity and asset prices, highlighting the growing significance of large corporate participants in the cryptocurrency ecosystem. BitMine's stock has also reflected the effects of this strategic initiative. By August 2025, the company became one of the 25 most actively traded U.S. securities, with an average daily trading volume of approximately $2.2 billion. During this period, its stock price experienced significant volatility, at times rising over 130% within a single week, and at other times experiencing temporary declines due to market corrections. Another critical aspect of BitMine's strategy is treating its Ethereum holdings not merely as financial assets but as a strategic reserve. The company considers Ethereum similar to how gold or oil reserves were valued in traditional economies, seeing it as a foundational asset for the digital economy. This approach explains why BitMine not only holds Ethereum but also engages with the broader blockchain community to support network upgrades, security, and global adoption. All of these developments serve as evidence that cryptocurrencies are no longer limited to retail traders or small-scale investors. They have become a serious asset class for corporations and institutional investors alike. BitMine's example demonstrates how major companies are integrating digital assets into their long-term financial strategies and participating in shaping the future of blockchain-based finance. This discussion is entirely for informational and educational purposes and fully complies with YouTube's policies. It does not contain investment advice, recommendations, or solicitation of funds. Instead, it provides a detailed look at the role of institutional players in the cryptocurrency market and how digital assets are becoming an integral part of corporate treasury strategies. By examining BitMine's actions, viewers can better understand how institutional investment, blockchain technology, and digital asset management intersect within modern finance. In conclusion, BitMine's $5 billion Ethereum Treasury represents a landmark development in the history of corporate cryptocurrency adoption. It illustrates the growing influence of institutional players in decentralized networks, the strategic importance of Ethereum within the digital economy, and the broader trend of integrating blockchain assets into corporate financial planning. This case offers insights into market dynamics, long-term investment strategies, and the role of digital currencies in shaping future financial ecosystems, all while operating within regulated markets and maintaining transparency through publicly available data. By observing these developments, one can appreciate the evolving landscape of digital finance and the innovative strategies companies employ to navigate it.